All right, hello guys, glad to have you on board again today. You know what time it is. Let's jump in. We're going to study flow sequences, S&P 500, and of course cryptocurrencies, which both have been making quite hell of a rocky last week. When it comes to the S&P 500, we've highlighted that into the weekly briefing, just to say that we've had a very nasty weekly bearish engulfing pattern, kind of very odd system, in which, well, frankly, we see the replicate of this in our intraday sessions by basically seeing that the market prices have shifted from one Bollinger Band to the other in the span of a week, and very much in a straight line manner. So remember that we don't over-explain stuff, we don't make it overcomplicated and stuff like that. Flow trading has to be somewhat very simple. Though in here, we just have to gather all the information. And remember, when we have this, that's the reason why I make them very much visible more than the other kind of system. Is just you really don't want to miss those. They tell you that for approximately 5 to 6 context boxes, there's going to have to be volatility. That means the prices will be like attracted, just like magnets, with those Bollinger Bands and stuff like that. So that means we had an alert saying, yeah, we're going to be very much attracted by either this or that. And the reason why, personally, back then, I taken those trades in these areas is because I made the bet that we would go right up here. Turns out we ended up the other way around. That's also the reason why, when I called the markets back then, it was basically with a large stop loss, to just make sure that if we were going down there, I wouldn't be just stopped out. Though it turns out we've had the answer of it back then, we've gone to the Bollinger Band, and then I said, remember, that's exactly what we said last week. The thing is that we had the potential now for a third flow. If we retrace to this Bollinger Band, this one in here, okay, I would definitely sell. It turns out we never touched that price. Yeah, we've gone very, very close to it, frankly. And I had selling orders all on those levels, just never got hit. So, truth is now we're back down to the previous low, and remember, this is where normally we're reaching out confirmation. That means those who manage to trade these areas, and like I said, truth and transparency in here, I am not in this trade, even though I expected to trade this area, it just never got filled. There were no other signals suggesting I should hurry or any other things like that. Remember, in here, I have traded before the Bollinger Band because I had reasons to do so. We were overbought, we had all these breakout targets, kind of basically saying, yeah, okay, let's just go in. In here, I see absolutely nothing. I mean, there are no breakout trades, there are no overbought territory. This is just like, okay, let it happen and wait until you get filled, which never happened. So I think, personally speaking, that this is a very weak selling area. The truth is that for now, we haven't broken the previous low point, which just made somewhat of a Pershing line, meaning that one candle closes below, candle we're after just retraces more than half of the previous one and closes back above the resistance, the support. So to me, this is too soon for those who eventually traded this area to say, okay, we've won the battle, let's stop that break even, okay? So if you're into this trade for God knows what reason, then first of all, congratulations, you're safe now, but it's too soon to say to put the stop at break even. So I would say for those who are selling in here, just keep a little bit of margin. Option number 2 for the bulls now. Remember, we switch camp because both are still probable until one of these two get invalidated, which so far isn't the case. Remember, those who traded this area, me included, we still have large stop losses and we haven't moved a bit. Okay? For those who were bears, you were willing to recharge on your bear trades out there. Personally, I was missing on this trade. So I'm still open for flow 3 until it gets invalidated. That means either this thing goes taking my stop losses. But we're still in the area. Remember, when you are into this thing, okay, you're always going to try supporting the Bollinger Band. Okay, we were waiting for the third range boundary, which means this Bollinger Band could be bought, but this one could very well do it as well. And in that sense, well, this is still a viable area. As you can see, we have all the relevant signals saying that the bears are trying fucking hard. If they fail, we're going to wrong foot them. That's the same story. So it's really the way it goes. For those who are trading to the third flow, it's still viable now. It could be invalidated pretty much sooner rather than later. So we're nearing invalidation much than the other way around. So don't get me wrong. That doesn't mean I'm now bullish like crazy just because I don't have a bear trade. It just means, well, if it goes lower, I'm going to get stopped out and it's going to be the end of it for me. That's really the way it goes. I missed the third flow. So if it happens, it's going to happen without me. All right, it's really damn simple. But until then, well, I would say it's too soon to say that flow number 3 to the upside potential has been invalidated. It's not the case now. Okay, so very, very important for you to understand. We are nearing the end of this volatility pattern. Remember, 5 to 6 context boxes at best. So we're nearing the end of it. That means this volatile move that we've had that made this current area very, very tricky to navigate. Well, we've gone to the maximum target for it, which is the larger Bollinger Band. Though now I would say be very cautious. That also means if for whatever reason the market wants now to go 180 degrees away from this, and it could trigger another volatility alert and just go straight to the other Bollinger Band. So just get ready for this. All I'm saying is many things can happen. For now, the bulls haven't been invalidated yet. I see the bears screaming out loud, everything's going to crash and stuff like that. Once again, don't fall for the narratives. Don't listen to the news flow. Don't listen to any other trader. Just look at your goddamn charts. And these charts, for me, still haven't said the whole story. They definitely have been scoring some points for the bears, but it's still not yet a won battle. So don't cry too soon, all right? It's really the way to go. So waiting for this to see how it's going to be. Very interesting to see what we'll have 1 week away from now. But, of course, the magic is not there. Well, the cryptocurrencies, once again, despite every other stupid narrative out there, I traded according to the patterns. I said, I'm going to buy those Bollinger Bands no matter what. I don't care. It was a very long and pain traded in here. Remember, we were in a large Wyckoff pattern, though handle psychology. But like I said, I wasn't hesitating a bit. I was very much in the bull camp to say we're probably going to get a third flow and stuff like that. Well, the third flow is now officially there. We've broken the previous high points, held candle closes out there and stuff like that. So, well, if you're on board for the third flow, congratulations. That's really the way it is. For Ethereum, it's still not yet the case, and we're going to talk about that because I know that's the #1 chat right now in the market. Why the heck is happening with Ethereum? Why does it underperform? Have you looked at the dominance fill and stuff like that? Yeah, remember, don't fall for these narratives. Just look at the fucking charts. Remember, just like I bought Bitcoin on the previous Bollinger Band area, I did exactly the same for Ethereum. I actually caught this one lower, but I've been supporting this thing. I mean, look at this beautiful triple bottom in here. Just once again, be patient. For Ethereum, same pattern, same structure. It's just different overall looking, but the structure is the same. There's nothing for you to pay attention to for Ethereum until it breaks 2,200. Okay, so that's pretty much the way it is. We're far away from this. I mean, Bitcoin already broke and is trading currently above those levels. Ethereum is nearly halfway through. So, of course, you're going to see people yelling out there and say, yada, yada. Ethereum's underperforming. Look at the dominance fill. It's all about Bitcoin and the ETF. And, well, shut up. Okay, all like I said, trade what you see and just shut up. That's the way it goes. I bought these areas and I'm still waiting for that third flow. Yes, Ethereum Bitcoin chart is also on supports and stuff like that. But until then, well, trade what you see. Just stop thinking too much. It's really how simple that is to me. We'll see. And we've mentioned back then that there would also be a probability and a world in which eventually Ethereum will be stopped out. That means your trades have a maximum stop loss of 1,400, and if it goes there, I'll take my fucking losses without crying out loud. It's really the way it goes, okay? It can happen, and if it happens, I'll trade accordingly. That's the way to go, okay? So once again, I see people making, I don't know whatever they do, but it is nothing close to trading. So I really, really would like to state it clearly one more time. Don't listen to the news flow. Don't go anywhere like, oh, I should do this or that because somebody in the internet said so, okay? Just learn a fucking pattern. Just trade it yourself. Be independent in your decision-making process. And that's really, really what matters a lot. Also make sure as well that the decision process isn't just based on your random behaviors, okay? It's the set of rules that you constantly apply and repeat. That's the way to go. So like I said, applied and repeat. That's what I've done. It worked for Bitcoin. We'll see if it worked for Ethereum. That's just as simple as it is. That being said, I'm going to wish you guys a pleasant week. Very curious to see what we're going to get 1 week away from now. But really, really, this week's takeaway is until the levels have been crossed, and I'm not just saying going out there, okay, double tops and double bottoms aren't crossing the levels. So bear that one in mind. In the case of the S&P 500, the current double bottom doesn't necessarily sign up for invalidation. Neither it does confirm that the third flow has started, has been confirmed. Okay. When it comes to cryptocurrency, well, this kind of relative strength disparity between the Ethereum and the Bitcoin, despite both of them having the same underlying structure, doesn't mean both of them will succeed, first of all, and doesn't mean the second one, who apparently could be lagging against the previous one in terms of maturity, doesn't mean it won't catch up at a later stage. Remember, that means if you think both of them have to go like a 30-degree angle or whatever shit that is, you're never going to be able to make it. Remember, you're never going to be able to control the distance that's going to be done, that's going to be achieved, nor the duration of the trades, okay? So the way you go from point A to point B is absolutely unpredictable in flow trades. Okay, and despite the fact that there is a kind of an historical correlation between Bitcoin and Ethereum, they do have different relative strengths at some point, and that's exactly what's happening now. If you look at ETH BTC charts, we're definitely moving fast out there. So that is, of course, something that explains the relative underperformance of Ethereum. But in flow trade, don't give it a fuck. It's really, really simple as that. So just let the dumps talk and do your job. That being said, I'm going to leave you guys with that. Have a nice week and see you 7 days from now.